Hello everyone. In accountancy, we are learning consignment account. Today we will see the last sum of consignment account. This is very important sum because it contains many difficult points. So please be very careful while calculating it and pay attention. Today we will start the sum number 44. In sum number 44, the information is given below. So let's start with the informations. Here it is stated that Sahid of Mumbai consigned goods to chef of Delhi at an invoice price. Now see, here we are having the invoice price. Invoice price is 2,70,000. Here we are not given the quantity, we are just given the total amount. Okay, so this is also the major difference here in this sum. Now it is given the goods on 1st April 2010, including freight and insurance of rupees 20,000. Now we have to be very careful that this amount contains freight and insurance of rupees 20,000 also. So our actual invoice price will be 2,70,000 minus this 20,000. Okay. Then we are given the information that the invoice price is fixed after adding 25% on cost price. So our profit is 25% on cost price. So how much for the invoice, how much will be on the invoice price? 20%. Okay. Now on 1st April 2010, Shahid drew a bill of rupees 1 lakh for 5 months on self, which is immediately returned by the later, duly accepted. Shahid discounted the bill with the bank on 1st June 2012 at 12% discount per annum. Now the bill is given on the 1st April 2010 for 5 months and it is discounted on 1st June, so means after 2 months. So how many months will remain? 3 months. So we will have to calculate the discount for 3 months. So 1 lakh into 12% into 3 by 12. Chef is entitled to get 10% general commission and 5% del creditor commission. This is the general commission and this is the del creditor commission on the credit to chef. Even in the addition to this, he is also to be given 10% of net profit as share in profit. Here it is given the line that 10% of net profit. Here it is not given that we have to give the 10% after deducting his share. Profit after deducting his share. So we will have to calculate the 10% straight away on the difference. Okay. So this is also different point than the last one. Then SEF was allowed rupees 12,000 per annum. Now be careful that 12,000 per annum towards establishment expense. Establishment expense will be considered on the month wise, like how many months we are preparing, for how many months we are preparing the account. It is depend on that. So it is, we have to consider that, okay, 12,000 per annum. On 31st December 2012, 31st December 2010, SEF sent an account sale and a bank draft for the amount due of for him. He reported in the account sale that now account sale is given, but right now pay attention that this date is given when the information is given, 31st December 2010. And our consignment goods sent on 1st April 2010. So the difference is, for how many months is there? April, May, June, July, August, September, October, November, December. So total it is 9 months. How many months? 9 months. So this establishment expense is calculated for the 9 months. 9 months means what? 12,000 per annum. So 12,000 per 12 month. So how many for 9 months? It will be 9,000. Okay. Now sell information is given. He paid rupees 10,000 for octroi and rupees 5,600 for selling expense. He returned 5% unsellable goods and paid 1,000 rupees for return purpose. Now 5%. How we are given not the amount, not the quantity. We are given the just percentage of goods. So we have the amount 2,50,000 because 270 minus 20. So we are having net amount 2,50,000. So we have to do the percentage of 2,50,000. Okay. So make it clear that we have to find out the percentage on which amount 2,50,000. So he returned 5% of unsellable goods. So 5% of 2,50,000 was returned. Then 1,000 is expense. So we will add this expense on the in the consignor's expense. Now 50% goods were sold for cash at 25% on invoice price. We are having this invoice price 2,50,000 is our invoice price. So we can take the directly 25% of that invoice price. So 50% goods were sold of cash, so that will be cash sales. 20% goods were sold on credit to Akshay at 30% profit on invoice price. So we will do the 20% of 2,50,000 plus we'll add the 30% of that amount as a profit, and that will be our selling price. Now 10% goods were sold to Amir as per Sahid's recommendation. This is the Sahid's recommendation, so it will not consider into the credit sale. First thing. Second thing, if Amir will be insolvent, then the responsibility of his bad debt is of Shahid. It means it's of consignment account. At 40% of profit on invoice price, we will do the same procedure for the Amir's goods also. Now 5% of goods were purchased by him for his personal use. We are aware about the self-purchase. So it is also same like that way. 5% of goods were damaged in the godown due to earthquake. Against it, insurance company for cash at insurance company accepted the claim of 70%. 70% means whatever the cost was there of that goods, company will give the 70% of that. Company will pass the claim of 70%. Now this damaged goods sold to the Salman for cash at 50% discount. Means whatever the goods was damaged, that goods also this the safe has sold, and it is sold on cost of 50% discount. Means it earns 50% price. So this will also, we will calculate how this can be done. Now here one major point is given that after paying 80% amount, after paying 80% amount. Here we are given the information after paying 80% of amount, both customers were declared insolvent. Now, here it is not mentioned that both customers were declared insolvent. Here it is stated that after paying 80% means both the person has paid the 80% of the amount and then he became insolvent. And 80% could be recovered from their assets. Means after remaining, means on the 20%, remaining the 20% amount, even we got the 80% of that. Okay, so this is also very important calculation about bad debts. Now the ninth point is repairing expenses of rupees 1,050 for remaining goods to make them sellable. From the above information, prepare consignment account and sales account in the books of Shah. Clear? So now let's start the sum. We will make the accounts in the books of Shah. So how many accounts we will make? 2 accounts. So let's make the first consignment account, debit credit. particulars amount, particulars amount. And our second account will be SAF's account. Same way. Okay. So now let's start the sum line by line. So here first it is given that Sahid of Mumbai consigned goods to SAF of Delhi at an invoice price of 2,70,000. Now, it is also included 20,000 freight and insurance. So first we will do goods sent to the consignment 2 lakh 50 by 2 lakh 50,000, 270 minus 20,000. And then we will find out how much profit is there. So first invoice price is given. So 2,70,000 minus 20,000 freight and insurance. So 2,50,000 is our invoice price. Now profit is 25% on cost. So 20% on invoice price. So we'll do profit is equal to 2,50,000 into 20 by 100. That is 50,000. So our profit is 50,000. So goods sent to the consignment account is 50,000. Now bank account, that freight and insurance will be there. Then we are given that on 1st April 2010, Shahid drew a bill of rupees 1 lakh for 5 months on chef, which was immediately returned by letter, duly accepted. Shahid discounted the bill with the bank of on 1st June 2010 at 12% discount. So we have to find out the discount. So our discount will be 1 lakh into 12% means 12 by 100 into 3 by 12. We have already discussed why 3 months. Okay. So 1 lakh into 12 by 100 into 3 by 12. So it is 3,000 rupees. So we'll write discount on the debit side of consignment account, bills receivable account, that is discount. Then the commission detail is given, so we'll not go into that. Then the establishment expenses given. We have calculated that 9 months are there. So establishment expense is 9,000. Now chef has given the account sale. So he paid 10,000 for octroi and 5,600 for selling expense, and he returned 5% on sellable goods and paid rupees 1,000 for return purpose. So we'll do the first that entry. Self account the expenses: octroi 10,000, goods return expense 1,000, and selling expense 5,600. So the total expense is 16,600. Now we have to do the entry of goods return, that is 5% of 2,50,000. So that will be goods sent to the consignment, goods return 12,500 rupees. And we have to bifurcate the profit also in the reverse side. So for 2,50,000 the profit is 50,000. So for 12,500 how much profit will be there? 2,500. Okay. So now then we have to calculate the sales. So now the sale part is there. Let's see our sales part. Here it is given the information that 50% goods were sold for cash at 25% on invoice price, profit on invoice price. So cash sales will be 50% of 2,50,000 is equal to 1,25,000 plus profit 25%. So we have to do the 25% of 1,25,000. That profit is 31,250 rupees. So our total sale will be 1,25,000 plus 31,250 is equal to 1,56,250 rupees. Then we are given the information that 20% goods were sold on credit to Akshay at 30% profit on invoice price. So credit sales, that is 20% of 2,50,000, that is 50,000. And then we have to add 30% profit of 50,000. So 30% of 50,000 will be 15,000. So we will add 50,000 plus 15,000, that is 65,000. Then it is given that 10% goods were sold to Amir as per Shahid's recommendation at 40% profit. So 10% of 2,50,000 is equal to 25,000 and profit is 40%. So 40% of 25,000 is equal to 10,000. So it will be 25,000 plus 12 plus 10,000, that is 35,000. Then self-purchase. We are given that 5% goods were purchased by him for his personal use at invoice price. So plus self-purchase, 5% of 2,50,000. Now 2,50,000 is invoice price only. So 5% of 2,50,000 is equal to 12,500, and that is invoice price. That is invoice price only. So we will consider that price 12,500. Then it is given that 5% goods were damaged in the godown due to earthquake. Against it, insurance company has accepted the claim of 70%, and the goods were sold at the 50% cost price. So that is also our part of abnormal loss, but this loss has been sold. So it is considered into the sales also. So let's see first abnormal loss. So valuation stock is 2,50,000 minus 50% because loss always will calculated on cost price. So valuation of stock is 2 lakh into 5%, so 10,000 rupees. Then we have added the expenses of consignee, that is 10,000 into 20,000 divided by 2 lakh. Because 20,000 is the expense on 2 lakh rupees. So how much expense is on 10,000? So it is 1,000 rupees. Then we add the consignor's expense, that is 10,000, because selling expense will not include in this. Even goods return will not, expense is not including in this. So 10,000 into 10,000 by 2 lakh, so that is 500. If we add all three items, then it will become 11,500. Now this is our cost price. Basic cost price is 11,500, the cost price of the loss. Then we will deduct the insurance claim, that is 70%. So on which 70%? The cost price. That is 11,500 into 70%, so it is 8,050 rupees. So if we minus it, we'll get the loss is 3,450. But we are selling this good on 50% rate. So our cost is 11,500, and if we do 50% of it, we get 5,750 rupees. That is showing the abnormal gain to us, that is 2,300 rupees. So this is the case of abnormal gain. So first we will do the entry of sales. We'll consider the sales. Abnormal loss, that 5% of 2,50,000, but the costing was 12,500. Sorry. So now abnormal loss is 5% of 2,50,000, and we have already found the cost, that is 11,500. So if we do the 50% of 11,500, we get the price 5,750 rupees. Now we add the total. The total sell is 90%. 50% plus 20%, 70%, plus 10%, 80%, plus 5%, 85%, plus 5%, 90%. So total sell is our 90%. And if we do the total of the amount, that is 2,74,500 rupees. So now this is our sell. So we can write safe account sales 2,74,500 rupees. Okay. Now we have to calculate the commission on that. So we'll do the commission, that is general 2,74,500 into 10%. So 27,450. Del credit commission will be given on the first credit cell only, because second is recommendation of consignment. So that will not include. 60, so del credit commission will be calculated on 65,000 into 5%, that is 3,250 rupees. So total will be 30,700 rupees. So this will be written in the debit side of consignment account. First, okay, this two entry has been left, that is insurance company's claim. We have seen the abnormal gain. So insurance company has given 8,050 rupees, so that will be credited in consignment account, and the abnormal gain is written in the debit side of consignment account, that is profit and loss account 2,300. If it is loss, we will write down in the credit side, but it is gain, so we'll write down on the debit side. Okay, then we'll write down the commission, general commission plus del credit commission, that is 30,700 rupees. Okay, now we have to find out the closing stock. Let's find out the closing stock. Sorry, bad debt. Bad debt is sale to Amir is 35,000. Now we have already collected 80%, so 28,000 already collected. So 7,000 is remaining amount, and again we have collection from his asset, that is 80%. So we'll do the 80% of 7,000, that is 5,600 rupees. And if we deduct 5,600 rupees from the 7,000, it will the answer will be 1,400 rupees. So this is our bad debt that will come in the debit side of consignment account. So we'll write down the bad debts 1,400. Okay. Now valuation of closing stock. Our goods sent is 2,50,000. 5% of 2,50,000, that is 12,500 is return. So we'll minus return 12,500. Then we'll minus sale 90%, including sales. We have already done in the total of sale. That is 2,25,000. So 2,25,000 is sell. So if we minus 2,50,000 minus 12,500 minus 2,25,000 is equal to 12,500 rupees. Then we have to add consignee's expense, that is 12,500 into 20,000 divided by 2,50,000 is equal to 1,000. And consignor's account, this is the same process which we have done in the abnormal loss. In abnormal loss, we are calculating on the cost price. So we have taken the base of 2 lakh rupees. And now valuation of closing stock, we are calculating on the invoice price. So we have taken the base of 2,50,000, that is invoice price. So consignor's expenses 12,500 into 10,000 divided by 2,50,000 is equal to 500. If we add these three things, our total will be 14,000, and minus repairing expense, that is 1,050 rupees. So we get the amount 12,950 rupees. Now our actual closing stock is, the invoice price of closing stock is 12,500, and our profit rate is 20% on invoice price. So we'll find out the profit on closing stock, that is 12,500 into 20% is equal to 2,500 rupees. Now we'll do the entry of closing stock. So consignment account stock 12,950, and the difference profit is closing stock difference 2,500 rupees. Okay, then we'll find out the profit share. So if we do the total of credit side, it is 3,58,000, and total of debit side is 3,38,000. So the difference is 20,000 and we have to calculate directly 10% of 20,000. So our profit share will be 2,000. So this is written in as a SEF's account, that is profit share 2,000. Now we will do the total of both sides 3,58,000 and our difference is 18,000 that will be goes in profit and loss account. Okay, 18,000 rupees. Clear? Now we have to make the SEF's account and we'll do the entry in SEF's account. So first entry in SEF's account will come of bills payable, sorry, bills receivable. That is bills receivable advance 1 lakh rupees. Then whole expenses, that is 16,600 rupees. Then we'll write down the sales on the debit side, that is consignment account sales 2,74,500. Then establishment expense, that is 9,000. Consignment account commission 30,700. Bad debt 1,400. Profit share 2,000 and total will be 2,74,500. So our difference will be 1,14,800 rupees. That is that will be goes in bank account draft, because this much amount draft has been sent by SEF to the site. So by this account, this sum has been finished, and with this sum, our this consignment account chapter is finished. In next lecture, we will meet with the next chapter. Okay, we'll start the new chapter in the next lecture. So I hope you have understood whatever the changes are in this sum. And if you find difficulties, you can ask me, and I will suggest you that please do practice, because practice only can help you to remember all the methods of accountancy. Okay, so please keep practicing, and if you find any difficulties, you can ask. Thank you.